This is our Forex blog for July 17th, 2012. I'm doing today's blog a little bit early because I have an appointment later today. I'm going to be gone for most of the afternoon. This is how we start each day. We look at the currency meter and we want to buy the strongest currencies versus the weak and the weakest versus the strong. This is also our sortable currency meter, which allows you to sort the currencies from strongest to weak. You can see today the dollar and CAD and yen are the strongest in terms of hourly trend. The Euro, Swiss, and New Zealand are the weakest. So by sorting it, you automatically are always looking in real time, and you can have that automatically resorted every 5, 10, 15 seconds, minute, 5 minutes, whatever you want to do. The real-time trend is on the top in histogram form, and anytime you see extreme strength at and above the 80 level followed by the pullback having less strength, I ideally like to see something like this with the Australian. Extreme strength, very little weakness, the strength usually comes back. Usually it comes back and lasts for 30 minutes to an hour. This is kind of a rare case where it only lasted for about 15-20 minutes, but nonetheless, you could have found a probably 8 to 15 pip move off of that. Underneath the real-time trend, we have the 15, hourly trend, daily, weekly, monthly. So you can see the dollar strong today, and the 15-minute trend strong. A little bit after 7, the hourly trend became pretty strong. However, the daily, weekly, monthly trend still down earlier today. But nonetheless, you can pretty much trade off the real-time momentum. I prefer when you can see all the time frames lining up. Now, the euro, for instance, pretty much all the time frames are down, and the dollar is strong. So you want to sell the euro dollar. It's that simple. And a little bit after 8:30, you can see price broke from above to below the hourly moving average, which we have in the middle. This is a 5 pips per bar chart, and we're working on adding as many trading systems as we can to our method. Some signals are going to be caught, like you can see right here, small profit. This one here fell about 15-20 pips. But one of them that I would have always taken that didn't meet the algorithmic rules is this right here. It breaks from above to below the hourly, goes sideways, and then when it breaks down, you get in. That was the ideal trade. You can also see in real time the momentum to the downside is extremely weak. All the up moves have very little strength, and that's pretty much the ideal way of trading. You can see yesterday, extreme strength, very little weakness. Where does it go? It goes up. And you can see nice move here. This one here failed. This one here went up 20, 30 pips. When it gets to the upper containment bands, you don't really want to be taking the buy trades, especially if not all the time frames are up, but sometimes those trades work. So I put them on the chart for traders that want to take aggressive, risky trades. Be my guest. You can see the pullback here worked. This one worked. This one failed. And the key to trading is small losses, big wins. If you get into a trade and it goes sideways, try to get out with a 5-6 pip loss. And you go short and catch 20, 30 pips, you got your loss back. It's not rocket science. And there should be no fear or anxiety when you pull the trigger. Now, another one that was strong today, especially after around 9:30, was the yen. The 15 hourly trends up. The weekly, monthly are already up, whereas in the dollar, the weekly trend's still pretty weak to the downside until 10:30. The euro is weak on all time frames, as is the Swiss. Now, before I show the euro yen, let me just show the dollar Swiss. Strong dollar, weak Swiss, and you're looking for buys. And that's the same exact pattern. Went from underneath above the hourly, went sideways, broke out, and took off. You have a buy entry here and here, and this one here probably went up 15 pips. This one here went up about 20. And you always want to use fib targets too. Once it goes up, draw your Fibonacci off of the last swing. Let me fix the bottom here. And most of the time, markets will stall in reverse somewhere between the 1.32 fib target and the 1.618. Now, this trend here is above our white band. Usually, it's going to reverse up there. So, be very careful. Don't be greedy when it gets somewhere between the first and second fib target, and breaks those bars low. I probably would have got out of that trade right here at 45. If I was in this trade right here, I would have got out of half of it here, and then the second half here, bought again when it broke out of this pullback bar, and then waiting for it to go up to the fib target. Now I would have got out of the whole trade right here. You can see how strong this was. This is a trend that's very likely to continue. All the time frames are up, and even before the breakout, the majority of the momentum was to the upside, even though it wasn't super strongly intense. Even though this currency is going sideways, what it's telling you is other dollar pairs are going up, and Swiss pairs are going down, and so the breakout happens up and it takes off. I mean, it's that simple. Our new release we released yesterday has the ability to the new FX trade signals. Let me remove this old one. I've left this running all week. FX trade signals. Oh, for whatever reason I didn't see it. There it is. It has this option, show counter trend. If you don't want to see counter trend, uncheck that, add it to your chart, and you're only going to see trend trades. And I am actually rewriting this trend code to wait for explosive trends and then getting into the moves. Actually, the new code did catch this sideways breakout here, because I put in a lot of different signals that look for sideways low volatility patterns like this. So it did actually catch this biggest part of the move here with the new FX trade signals. The one that I had on there before was the older one. So had this nice move here, beautiful trade right here. This was actually a counter trend move, which, because I removed the counter trend trades, didn't show up now. Now let's look at the euro-yen. Weak euro, strong yen. And I'm going to remove this old FX trade signals and put the new one on there. You can see the old one doesn't have the option of removing the counter trend signals. FX trade signals, here's the new one. And I don't mind showing the counter trend. I don't typically take those. I haven't spent much time enhancing the counter trend signals. I've been working mainly with just trend trading. So when it's above the hourly, we're looking for buys. Small profit here, small profit, small profit. And unfortunately, when the market's weak and moving back, I'm looking for a decent enough pullback to get short. This one really wasn't decent enough a pullback. We look for basically 3 to 5 bar up moves followed by a red candle, and then we go short. Unfortunately, this one never pulled back enough to give you a signal. Oh, there's no reason that you can't take trades based on your own intuition. If there's extreme weakness like this, 15-minute trend's blood red, the hourly trend's red. Unfortunately, the daily trend didn't shift down at the time, but the weekly and monthly trend are super weak. It's one of the weakest currencies. And another tool you can use, which we just released yesterday, is the FX Fisher oscillator. I'm going to put this one on there because I didn't install the new one. And basically lets you see, momentum moves. Most of the time, when the price gets down to the lower extreme band, you're going to get a reversal. If it hits the upper extreme level, you're going to also get a reversal to the downside. So as we go back, we can see, right here, the market's at an extreme, kind of went sideways. Another extreme right here, and pulled back a little bit. This was one hell of a strong trend. It usually pulls back or goes sideways. Here's the upper band. And that one pulled back 10, 20, 30, 40 pips. You're usually going to get a sideways move followed by continued trend or a pullback when they hit these extremes. Another tool I'm working on that I'm going to showcase now is digital signal processing in its finest. Advanced math that's used to clean up dirty signals in the music and video processing applied to trading. So let me put this on the chart and just compare it to a 20-period moving average. I think you'll find that it's very fast. And you can use this. I'm going to put a 10-period on here. If you have a super weak currency, like this, in fact, I'm going to put a 20-period on here just because this one's a little too fast. It's extremely fast by itself. So 20-period regular moving average would be similar to maybe a 30 or 40 period with this. And it's also super smooth. I've created some trading system with this that automated that I used. I'm going to be putting into our FX trade signals as well. All right, so you can see this is a 20-period digital signal processing, for lack of a better term, moving average, but it's not in any way like a moving average. It's extremely complex math using mostly trig functions. When you get extremely weak currency like this that pulls out above it, I would wait for kind of a few bars above it. When it goes back down underneath it, you go short. And that's going to be part of our systems to come. Enough of a pullback is one that goes above this and kind of goes sideways for 3 to 5 bars, and you're back in it again. And you can see the market kind of was chopping above it, up and down, up and down, up and down. Or you can wait for 2 closes underneath it. First close, second close, you're in. They caught that huge move earlier. You can see one close down underneath it, second close down underneath it. Boom, huge move. And that way you avoid the false trades of only one close underneath it. You can see one close, second close, you'd be short. Your stop is almost already at break even on this latest trade right here. It's pretty remarkable. Let me just show you what a 20-period moving average looks like next to it, by the way. And I'll even use a faster exponential, which is faster than a simple moving average, just so you can see how much faster it is than a regular moving average. So if you are at a key level where you think there's going to be a reversal, it might pay to wait for it to go above this level before you go long. And sometimes counter trend trades don't work. If you are up, let's say back here when the market was extremely overbought, wait for a close underneath there. You can see you go short right here, and the market kind of pulls back slowly, 10, 15, 20 pips before going up again. You can see a pull back up, 2 closes above it, you go long, it goes up. It's a relatively whipsaw-free trading method. It doesn't get you in and out and in and out with a bunch of tiny losses. If you use it the proper way, you can avoid a lot of false, triggers, and especially when you have super strong trends like this, it's pretty good. Also, even as a trailing stop, it's pretty much as fast as our very fast trailing stop. You can see it pretty much is right there at the end of the move. When the market kind of goes sideways, it catches up to our trailing stop and gets you out the same time.